Good morning everyone and welcome to Morning Markets. Today I wanted to take us back to Friday and the US unemployment report and also look to the week ahead. So turning back to Friday, and events in the US, particularly as it relates to unemployment, are really crucially important at this point in the economic cycle, both in relation to the trends that companies are seeing and reporting, but also how this feeds into how the Federal Reserve are thinking about interest rates. We know that over the past 14 months, as the Federal Reserve have been increasing interest rates, we really haven't seen a change in the unemployment rate, and indeed it continues to remain very robust. So if we look back to Friday, what we saw an improvement in the unemployment rate. That hadn't been expected, so the US unemployment rate at 3.4%. Also, we saw average hourly earnings increase 4.4% year on year as well. So within that, the trends continue to remain very robust. We did, however, see maybe tentative signs of a slight change with revisions to the past couple of months' data as well. So overall, the jobs picture in terms of the growth in jobs, not as strong as we had been led to believe. That said, it's very important for the Federal Reserve to continue to focus on this metric. It is the metric that they seem to be most looking at to get a sense of whether those increases in interest rates are having and starting to have an impact on employment prospects. Also then, how did that feed into asset markets? We had a stronger day on Friday in the US, but also we saw bond markets react. And that's important because right at the front end of the bond curve, a much better indication of how the market is thinking about interest rate expectations. And maybe just a sense there that we may have to see further increases in US interest rates as well, just given this ongoing strength in the employment situation. We also then look to the week ahead. What can we expect? Again, crucial data from the US in particular, both consumer price indexes and producer price indexes. The consumer one will be really quite important to look at because we have seen this dislocation, if you will, between what's happening at the headline level and that in the core level of inflation. If we cast our mind back to last month, core inflation did accelerate. So certainly we'll be looking out for that and be reporting back as well. We also have the Bank of England on Thursday, broadly expected to increase interest rates to 0.25% to 4.5% as a result of that move. Again, we'll discuss that as we get to that point later in the week. I'll leave it there today, but thank you very much for joining us.